What's going on, everybody? MandoTrading here on November 12th, and in this video I'm going to break down those longer short quizzes that I did on Saturday, and we can figure out how I came to the conclusion that these would be, one, good for a quiz, and two, just a little demo on some price action reading. So if you aren't already, please like and subscribe to this channel. I'm going to start pumping out more videos when I see we get consistent viewership. So let's see what we can do here. All right, so question number one, I made it a little tricky and I did so purposely. So if you go all the way to the left here, you'll notice that we do indeed have a bearish market structure until, scroll over just a little bit right into here, you'll notice we make a bullish imbalance to the upside while taking out multiple swing highs in the process. That's good enough to shift market structure bullish. And from that point, I would be looking for a discount retracement into a bullish imbalance, and from that point, that's when I would be looking to go long. So that would be just the ultimate idea, and here's the answer. And as you can see, this is from SPY, the 30-minute time frame. You'll notice this was right around the bottom that we made after breaking market structure back to the upside. You'll notice that price retraced back to where? Discount, so anything below that 50% in a bullish price swing, which we had following taking out these highs right here, right? We got our retracement back down to 50%, this bullish imbalance. You have a volume imbalance and a bullish imbalance right on top of each other. And from there, that would ultimately signify that we could get some sort of reversal at that point. Obviously, I don't put them in the quizzes. I'm not trying to trick anybody, but we also did take high time frame liquidity, which you really didn't even need to know for this example in particular. But yeah, so this is our first, and obviously you know what price SPY is right now. So this was a while ago, but this was really the beginning of our rally that occurred a couple weeks ago. All right, so here's question number two, and you'll see it says Microsoft 5-minute on it. So we make a large bullish imbalance in the overnight session here. Obviously, this is a Monday, but we make that large overnight session move. And we set a range, right? Range high would be here. And that's the thing. When we take out highs, I'm not really necessarily looking to short anything until I get some sort of imbalance form, which in this situation would be right here. And as you can see from that point, we that would be your bearish imbalance right here. We reject it and we move lower, but this is a bullish price range, right? Taking out highs in the process. I'm not trying to trick anybody by these. This is just looking at candles and making educated, I don't want to say guesses, but I guess anticipating price to do specific things at specific points. So as we retrace back into this bullish imbalance is the form of a bullish fair value gap. You'll then notice that you almost immediately, we, boom, take off. So here's your dip right back down into the 79%, perfectly holding on to the golden pocket and also the midpoint of that bullish imbalance that had taken place. And from there, takes some time, but ultimately our target was reached. That's about a 6-point move. So if you're trading options contracts, that's a pretty darn good move. So that was number two. That one was pretty straightforward as well. Quiz question number three here. We have a bearish market structure. Okay. Why would I say bearish market structure? Was this low taken? Yes, with this price run. Were these lows taken? Yes, by that price run, right? Now, the only difference in this one in comparison to, I don't know, say any other one that we've done previously is that after we set the range here, we never got a discount retracement from this point. So to me, all that indicates is that the range is not set. And I'll show you exactly what I mean by that right here. So as we make this move lower right here, back down to here, right? No 50% retracement was made on this, even this bounce. It was not 50% of this range. So to me, range is not set. And from that point, I'll continue to drag until we get some sort of 50% retracement, right? And as you can see, we do get up into that golden pocket, specifically a bearish imbalance in that golden pocket. 2 taps, and on the second, we obviously melt down and we end much lower. So from that point, it's about a 4-point move. That's pretty good on a Disney contract. But again, to me, it's automatic what market structure we're in. And that's why when I do these quizzes, I'm not trying to trick anybody. I'm not going to put one where we sweep higher time frame liquidity, and I'm not telling you that, right? I'm keeping it as simple as possible. Look for the trend, look for the retracements, and specific. All right, so we have quiz question number 4 here, and this one was great because I inadvertently took a trade off of this. I guess maybe that was the wrong word. I was watching it. This is the dollar, by the way, so I wasn't necessarily trading the dollar, but I was using it as an indicator for a trade on NASDAQ. So if you take a look right here, you'll notice market structure is bearish, and again, this will also come down to the similar situation as the last one, where upon that first low, we never made any retracement back up to 50% from this low here. And this low, absolutely we did. You'll notice here's our 50% or discount retracement, I should say. Here's your bearish imbalance in discount. And as the trade goes on, you'll notice we fall off a cliff because market structure was bearish. We got into a bearish imbalance in discount of the bearish range. Therefore, we would look bullish, especially when there was no higher time frame liquidity taken. And again, I'm not going to put that on these quizzes. I'm just basic price action, basic price reading, nothing too crazy. I'm not trying to confuse anybody. All right, so last but not least, we have our 5th and final question of Saturday's long or short. And in this one, you'll notice that we do, in fact, have a bullish market structure. Why would we have a bullish market structure? That's why I left this wick on. As we break that wick, you'll notice we continue to run higher. So the fib range for me would be set just on that right there. Boom. So there it is. You'll notice here's your break, right? Why would I not put the fib high here? We never had a discount retracement from that. So to me, I'm not going to be looking as the range being set just yet. So I'll wait for the range to set on a high. Look for that retracement back down into discount, specifically a bullish imbalance in discount. This time lining up perfectly with our golden pocket, 62 to 79%, and we take off. So again, these are just fun exercises to practice your ability to read price action. This is what we do in my group, Galaxy Trading. We read price action. You'll notice there are no indicators necessary for any of this. Also, another thing that doesn't matter is what the ticker is. It truly does not matter what ticker it is. It also doesn't matter what time frame it is. All that matters is being able to read these candles in a way that, 1, you can justify moves. 2, you understand that when something specific happens, your expectation is for, whatever it might be. If we're retracing into a bullish balance in discount of a bullish range, you would expect that to be an up move, and vice versa. This is really not even touching on the concept of liquidity, which I think is the most powerful tool that you can use as a trader. But maybe I'll make another video on that at another time. But here are the 5. These are our 5 examples. And I just wanted to get on here and kind of explain it verbally that way for those of you who prefer that over, I don't know, just reading. Hopefully this helps a little bit. So again, if you haven't already, please subscribe to the channel, like this video. Let me know if you like these. I'll do these more often if that's the case. And I'll catch you all next time.